Wanted to take a look at the stock market today. The stock market is actually up considerably given what's going on with Iran and Israel. We're up about 1.3% on the stock market. It's backed off just a little bit from its highs. One of the key factors there is we're only about 1% from all-time highs. I saw SPY trading roughly 605, 606. We're about 5 points, which is 1% from 611.50, I think 611.25 on the all-time high back in February for SPY ETF. Now, the big move, of course, was Iran, Israel. Thursday, we've eclipsed that high from Thursday. Oil is what I really want to talk about within this video, breaking down oil. I'm going to take a look at USO ETF. USO ETF is the oil trust fund for the United States. That one has had surged significantly, backing off. I jumped in on SCO ETF, and I wanted to break down the rationale behind this. Basically, this is the bullet point. Iran has no real capabilities nor allies that can do anything to really mount a sustainable attack. And as long as the United States continues to send arms to Israel, I think I've seen $3.5 billion a year in arms for Israel. Iran doesn't really have that much capabilities. They kind of have to take it on the chin. Given that, moving forward, I expect that this will continue to blow off. USO ETF or oil will continue to sell off, probably get back down below into the 60 handle. We were trading about 63 to 65 prior to this event. SCO ETF is shooting back upwards. This is an inverse oil ETF. I got in, sold some puts underneath. I did a vertical spread underneath, and that's already eroding rapidly. And I expect that to expire at the end of this week, worthless, which was the strategy for that. Let's jump in. I'll show you some charts and break things down. Certainly, you've probably seen the headlines all weekend long. This is USO ETF, USO, the Oil Trust ETF here in the United States, and it basically follows oil here in the United States. Big surge up. We had already moved higher. Now, I had expected oil to actually move much lower. Saudi Arabia had dumped into the market. They're going to increase starting this month and into July and August. They're going to continue to increase production in order to push the price of oil significantly lower. They're punishing Kazakhstan and a couple other countries. Kazakhstan is the same thing as Russia. Russia, of course, is pushing oil through Kazakhstan, purportedly, in order to sell in the open markets because of the sanctions on Russia. Now, since oil prices have moved up where they are, this helps Russia out a lot. Because of that, the world will not be okay with oil prices at this high. This is why I expect oil prices to move lower because of Saudi Arabia dumping into the market as they are. Iran produces, I think, about 5% of the world's output for oil. Probably not going to see real disruption on a large scale for oil from Iran based on the attacks from Israel. So honestly, we've been seeing tit for tat. There was about 6 events in 2024 alone between these two countries. Nothing is new here. So this big move upward is kind of overblown. We're already seeing the price of oil moving back downward. So given that, this is the how I played this SCO ETF. It's an inverse ETF. I tend to, instead of going short a specific ETF, what I'll end up doing is finding the inverse ETF. For me, because of the mentality of the market, always wanting it to be on the long side, I tend to step in that direction. Now, I stepped in over with vertical put spreads. It was a credit, all right? Selling the near term, I have a $1 spread on this, and there's about, I think, 3.5 weeks on this. And effectively, I'm looking for this spread to expire worthless. The puts, I sold the near-term puts with a $1 spread, buying the long-term. My risk is $1. I took in about 22 cents. So I expect that I'll, at the very most, receive that 22 cents. I'll probably get out at anywhere from 12 to 15 cents just to free it up if I can get that move by the end of this week. I tend to get in, get out, and then that time is a little too much of a factor for me. I'll take that money quickly, then look for something else. I tend to not wait for those last 5 to 7 cents. I'm in, I'm out. I'm in and out. So SCO ETF, again, this is the ultra short crude oil ETF. It goes inversely to the price of oil. As you can see, of course, we've moved downward. I could see SCO moving back upward to about 18 to 19 from here. I don't know that I'll necessarily take a long position on this. What I'm looking for is the economy itself to start to show signs that it is wearing down because of the tariffs. Now, we're not going to see that anytime soon because a lot of companies pre-ordered product, shelving it, while at the same time, one of the reasons why we're seeing the stock market as high as it is and not really caring that much about the overall tariffs is because the tariffs are likely to be removed. The courts have already said this is way overstepping your boundaries. That's good news, of course, except for the fact that that is a huge hole overall for the deficit, which has been a big concern. You want to pay attention to the bond market. Stocks sold off sharply on Friday, and I'm going to be putting out a video on this specifically. Stocks sold off Friday. Now, what normally happens is you'll see equity investors getting out of stocks to protect themselves, rushing into bonds just for a short-term period. That didn't happen. Bond yields, because if those investors got out of stocks and rushed into bonds, price would have gone up, interest rates would have gone lower. Interest rates moved higher on Friday. Mechanisms are not functioning as they should be. That should be something, and that could be short-term, but that should be something that happens in a regularly liquid market. We're seeing that breakdown. Real quick, SPY ETF, this is a 3-minute bar chart. We're getting real close to that high from that we saw, what was it, Friday, Thursday, Wednesday. We saw a big spike higher that hasn't been eclipsed. 611, I want to say 611 and a quarter, 611 half is the all-time high for SPY ETF back in February. That's a little less than 1%. I think I saw 604, 605 printing. So 611 half gets you to that all-time high. Tariffs get removed. The only issue then becomes slower growth for more traditional stocks. The Magnificent Seven, of course, don't seem to care about interest rates too terribly much. Here's a look at SPY ETF on a 1-hour basis. You can see going all the way back to January, February, the all-time highs there. We're getting closer and closer. In the meantime, I'm sending out daily emails with this kind of breakdown with the video itself. If you want to skirt some of the advertisements on some of the, specifically YouTube, on some of those, you can get this in your email inbox on a daily basis where I'll break that down. Make certain to stop by. The links are down below for my Substack newsletter. The website and Substack are one and the same. We'll see you in the next video.